Welcome back to Global Crypto, the channel where we break down everything happening in the world of digital assets so you never miss a beat. If you are watching this right now, I want you to pay very close attention, because what we are about to talk about is genuinely one of the most significant developments we have seen in the XRP and Ripple space in a very long time. This is not hype. This is not speculation for clicks. This is real, confirmed news that has the potential to reshape how the entire global financial system operates, and XRP is sitting right at the center of it. So grab your coffee, settle in, and let us get into everything that is going on right now, because today's video is packed with updates, analysis, and some numbers that are going to absolutely blow your mind if you really stop and think about what they mean for the future. So let us start with the headline that has the entire crypto community buzzing right now. Brad Garlinghouse, the CEO of Ripple, has reportedly been appointed as part of the United States Crypto Council. Read that again. The CEO of Ripple is now sitting at the table where the rules of American crypto regulation are going to be written. On top of that, the CFTC, the Commodity Futures Trading Commission, just announced a CEO Forum, and Ripple has a seat at that table too. Now think about what this means on a deeper level. For the better part of a decade, Ripple has been grinding, building, fighting legal battles, and pushing for regulatory clarity in an environment that was frankly hostile to crypto. They built a payments network that real financial institutions around the world actually use. Then they went head-to-head with the SEC in one of the most watched legal battles in crypto history, and they came out on the other side standing tall. And now, they are not just playing by the rules anymore, they are helping write them. That is a completely different level of power and influence. Now here is the part that most people are completely glossing over when they read this news, and I really want you to understand this because it is crucial. The CFTC CEO Forum is specifically focused on tokenized non-cash collateral. At first glance, that might sound like boring financial jargon, but stay with me here because this is actually the gateway, the real gateway, to integrating XRP directly into the American financial market infrastructure. The CFTC's Digital Asset Market Subcommittee is already recommending expanded use of non-cash collateral through blockchain technology. That means the people who regulate derivatives and futures markets in the United States are actively pushing to bring blockchain into the core machinery of finance. And Ripple, the company behind XRP, is the one sitting in the room when those conversations happen. That is not a small thing. That is enormous, and I genuinely believe a lot of people have not fully processed how big this actually is. Let us talk about why Ripple's presence in these regulatory conversations matters so much beyond just the PR value of being in the room. Ripple's long-term goal has always been to position XRP as the foundational layer for tokenized finance, a world where trillions of dollars in real-world assets move seamlessly across blockchains and between traditional financial institutions. If you have been watching XRP for a while, you already know that the team behind it has been working hard on interoperability, making sure XRP can work with EVM-compatible chains, and there are companies like Axelar and others building cross-chain use cases right on top of the XRP ledger. None of that is accidental. Every piece of the puzzle is being put in place deliberately, so that when the moment comes for institutions to actually move value on chain at scale, XRP is the bridge that makes it all work. That vision is now closer to reality than it has ever been. Here is something else I want you to really sit with. The analysts and researchers who track this space are estimating that the total value of tokenized real-world assets will reach somewhere between $10 and $11 trillion by 2030. We are talking about real estate, government debt, investment funds, and much more, all being represented on blockchain. Now that number sounds massive, and it is, but honestly I think it might actually be conservative. Think about it this way. Once you start tokenizing stock markets, once bond markets come on chain, once derivatives find their settlement layer in blockchain infrastructure, the sheer velocity of money moving through these systems will be unlike anything we have ever seen in financial history. Do I think we stop at 11 trillion? Personally, no. I think once the flywheel really starts spinning, we could be looking at 30, 40, maybe $50 trillion of on-chain value within a decade. Nobody has a crystal ball, but the trajectory here is pointing straight up. And this brings me to something really important about the bigger picture of what Ripple is doing right now. Winning the legal battle against the SEC was never the finish line. It was the beginning of Phase 2. Think of the SEC case as clearing the road of debris so that the real journey could start. Now that regulatory clarity is beginning to emerge, and now that Ripple has a voice in shaping the rules themselves, the company is moving into its most consequential chapter yet. XRP is no longer just a payments asset used to move value quickly and cheaply across borders. It is positioning itself to become the backbone of an entirely new global tokenization economy. And with that shift comes a revenue model that scales far beyond simple transaction fees. We are talking about a piece of a multi-trillion-dollar market that is only just beginning to take shape. This is why the people who truly understand what is happening are so bullish right now. While we are on the topic of institutions making moves, let us talk about something I saw that confirmed what a lot of us in this community have been saying for a while. During a recent market dip that had a lot of retail investors nervous, panicking, and selling, whales, meaning large institutional investors, came in and scooped up $520 million worth of XRP. $520 million. While retail was dumping, the big money was buying with both hands. And this is something I genuinely want every single person watching this channel to understand. The disconnect right now between retail sentiment and professional investor sentiment is at one of the widest gaps we have ever seen in crypto. Matt Hogan put it perfectly when he said retail sentiment is at multi-year lows, while professional investors are extraordinarily bullish. That tells you everything you need to know about where smart money thinks this is going. Now let us shift gears and talk about something that absolutely deserves more attention. There appears to be movement suggesting integration between XRP and the Swift payment network. For anyone who is new here, Swift is the backbone of international banking. It is the messaging system that banks around the world use to communicate and settle cross-border transactions. If XRP finds a meaningful role within or alongside the Swift system, we are talking about connecting to a network that processes trillions of dollars in transactions every single year. Now, I'm not going to overstate what we know right now because the details are still developing, and I want to be responsible with this information. But the fact that a payment hub technology called Payment Safe, which unifies domestic, international, and Swift payment networks with ISO 2022 compatible infrastructure, is being discussed in the same breath as XRP ledger compatibility is something you absolutely should have on your radar. Watch this space closely. Let us also talk about something that is really going to accelerate all of this, and that is the problem of Nostro and Vostro accounts. I know that sounds incredibly technical, so let me break it down simply. When a big bank wants to send money from the United States to the United Kingdom, they need to have pounds already sitting in an account in the UK and dollars already sitting in an account in the US, ready to go on both sides of the transaction at the same time. Now multiply that across dozens of currencies and hundreds of countries, and you start to understand why banks have accounts all over the world with money preloaded in them, just waiting to be used for settlement. The best estimates I have seen suggest that somewhere around $27 trillion is locked up globally in these kinds of accounts doing absolutely nothing productive. If banks adopt Ripple and XRP for settlement, that $27 trillion gets unlocked and put back to work in the real economy. And that is a transformation that goes far beyond crypto. Think about what that actually means for the financial world when those funds get freed up. Smaller community banks that right now have to keep enormous reserves tied up in correspondent banking relationships could suddenly redirect that capital into small business loans, home mortgages, community development projects, and new services for their customers. Larger banks could build entirely new product lines, hire more people, and operate at margins that were never possible under the old system. The downstream effects on the broader economy would be massive and long-lasting. This is not just a story about XRP going up in price. This is a story about a fundamental rewiring of how money moves through the world, and the efficiency gains that come from that rewiring have the potential to lift communities and economies in ways that most people are not even beginning to think about yet. This is why I keep saying the implications of what Ripple is building go way beyond crypto. Now let us talk about XRP Depository Receipts, because this is another major development that I think deserves a spotlight. Fox Business has confirmed that XRP Depository Receipts are going to be made available for accredited investors through Receipts Depot and DWP advisors. Think of this like an American depository receipt, the kind that lets American investors buy shares in foreign companies without dealing with foreign exchanges. An XRPDR lets investors get exposure to XRP without having to go to a crypto exchange, set up a wallet, or manage private keys. The underlying XRP will actually be held in custody by Anchorage, which is a federally chartered bank regulated by the Office of the Comptroller of the Currency. This is another bridge being built between the traditional financial world and the crypto ecosystem, and every bridge like this makes it easier and more comfortable for the next wave of institutional money to come flowing in. Let us also give some attention to what is happening with SBI and their shareholder program involving XRP. SBI Holdings announced that XRP will again be featured as part of a shareholder benefit program, offering roughly 2,000 yen, which works out to about $13 in XRP to qualifying shareholders. Now, some people might look at that number and shrug, but I actually think the significance here is less about the dollar amount and more about the signal it sends. When a major Japanese financial institution is using XRP as a shareholder reward, it is normalizing XRP as a legitimate financial asset in the eyes of institutional shareholders, many of whom are wealthy investors and corporate decision makers. Once those people start holding XRP, even a little bit, they get curious, they do their research, and some of them end up buying significantly more. This is how adoption spreads through the institutional layer. Here is something I also want to address for context about the broader macro environment we are operating in right now. Global debt as a percentage of GDP is at staggering levels across basically every major economy. The United States is sitting at over 120%. Japan is at 263%. France is over 100%. Almost every major economy on Earth is carrying debt loads that by historical standards are completely unsustainable. Now, I'm not here to be a doom and gloom guy, but this is the backdrop against which the entire conversation about alternative financial infrastructure is happening. When governments are printing money at this scale and debt keeps ballooning with no obvious end in sight, it creates pressure for a new kind of financial system. And the more pressure builds up in the old system, the more attractive and inevitable the new one looks. XRP and Ripple are building infrastructure for exactly that new system. Now let us bring it back around to where we started. Brian Armstrong, the CEO of Coinbase, recently pointed out that if you think of Coinbase as a bank, it holds around $420 billion in assets for its customers, which would make it roughly the 21st largest bank in the United States by assets. That is a remarkable number, and it tells you something important about the pace at which crypto is eating into the traditional financial industry's territory. Banks are watching this. They are not asleep. They see that digital assets are capturing massive amounts of value and generating enormous fee revenue, and they want a piece of it. That competitive pressure from traditional banks looking to get into the digital asset space is actually going to accelerate the adoption of infrastructure like Ripple's network because banks want compliant, regulated, familiar tools. And that is exactly what Ripple is offering them. And finally, let me leave you with this thought because I think it is the most important takeaway from everything we covered today. Out of more than 5,400 currencies that have been issued on the XRP ledger, XRP itself remains the most used by a significant margin. That is not marketing. That is usage data. And over the next few years, as more and more assets get tokenized, as more banks come on as nodes on the Ripple network, as more regulatory clarity emerges, and more bridges get built between traditional finance and decentralized infrastructure, the number of currencies and assets flowing through the XRP ledger is going to grow dramatically. And XRP will be the bridge currency at the center of all of it. We are not at the finish line. We are at the beginning of the most exciting chapter this ecosystem has ever seen. That is it for today on Global Crypto. Hit that like button, drop your thoughts in the comments, and we will see you in the next one. Stay sharp out there.